Hi guys, Igor Vasiliev is here, and during this short video I'm going to show you how profitable can be the strategy which called selling covered calls. Now a lot of people using this strategy, and generally you might receive from 2 to 5% on a monthly basis in cash from using this strategy. Now sometimes you can get more if you kind of knew the direction of the stock and predicted it correctly. Sometimes it could be less if the stock itself, underlying stock, went a different direction. But in any way, if you do it properly, it can generate constant cash flow. Now, sometimes you can generate very good results when using this strategy. And this particular time, I'm going to show you one particular share, which called Bed Bath and Beyond. And the main reason why you could see so great, fantastic results from this particular strategy, because that company is going through the short squeeze right now. Now, if you don't know what the short squeeze is the situation when there are a lot of traders on the stock market shorted the company. So they played on the downside, and they kind of believe that the company is going to go down. So what they've done, they borrowed shares from the broker and they sold it. Now, and when the price started moving up, what happened with with those guys? They decided to close the position, so by using stop losses. But the problem was that there wasn't enough liquidity in the market, so the amount which they wanted to purchase, nobody was selling. As a result, the company price started moving pretty fast. Now, in order to secure their position, a lot of traders like that, they start buying calls, because when you buy a call, you kind of getting a right to buy shares at a certain price. And because of that, people who own the shares, they actually can generate huge amount of income from selling covered calls without even selling shares. Now, I could sell the share and generate the cash from that point, so when it moved to the top highest level. But the problem here that you never know how high it can go. You never know if it is going to go that high or not. But when you see the option premium which you can receive, you actually can generate cash upfront, and you know exactly how much money you're generating. Now, of course, if you also at the same time predict where the share can be at the end of your expiration or during the time, you also collect the growth in the share itself. Now, guys, I'm going to show you real examples from one of my brokerage accounts, and to show the trades which I've done within the last couple of weeks, and you will calculate the profit yourself. Okay, let's have a look.
Okay, guys, that's what we can see. So the share moved after earnings, started moving from 7th of January, and you can see the move was pretty significant. So if you managed to buy here at $18 and managed to sell at the highest, was around $54, so you would make more than 100% profitability. So of course it is a fantastic return, but nobody knows when it's going to happen. And the main reason for that move, it wasn't that the company produced a fantastic financial results, but the problem was that they bet their expectations, so they produced better results than expected, and as a result they started moving up. And those shorts guys who shorted the company and probably believed that the company is going to go to somewhere to $14 or maybe even lower, they decided to close the kind of short positions. And as a result, you can see on that level, the share price started just moving crazy. It was jumping up. So it was moving so quickly that even if you were like sitting and glued to the computer, sometimes you wouldn't be able to trade because the volatility was so huge. Now, instead of trading your shares, I actually first initially expected that the share price is going to go and stay somewhere on those levels. So, and then I saw the volatility and the premium, price premium which you can receive. So I'm going to show you here on this particular account just a few trades with this particular share. You can see the amount of shares is 2,000 shares. Okay, so who knows how to trade options, you probably understand that in order to profit from that, you can sell 20 contracts of covered call. As you can see below here, you can see the trades which happened. So I have 2000 shares, I already showed you, and these are three trades which I've done. So first trade was 26th of January, so it's only 6 days ago because today is 30th. And as you can see, I sold a covered call with a strike price of $45. So at that particular moment, the share price was around $32. So it means that if you look at the graph, so the share price was somewhere here, okay, and I sold out the money call with $45 strike price, and I received $1.15 a share. Okay, so because I have 2000 shares, it means I generated $2,300. Now if you calculate that, I generated $1.15 per share, and the share cost at that moment was $30. So the profitability was $1.15 divided by $32 equals 3.5% a week, because I've done it for just a week. So I sold the 26th until 29th, even not a week, it's 3 days only. Now guys, last night, that 29th, the call was practically expiring because the share price at that time was around $35. And what I've done is I just bought it back. So that's right. So you can see that because I wanted to sell a new one and I couldn't do it because my broker wouldn't allow me to sell covered naked call. So what I had to do, I actually had to buy 20 contracts back, but I paid only 22 cents for that. So in total, if you multiply 2000 shares by 2 cents, it's close to $40 I paid back in order to close this position. Now, and here I collected, as I already explained, $2,300. Now, instantly you can see the differences between those two trades. That was 15:55, so it's 5 minutes before the market closes in America, and here's 50:56, so it took me only 1 minute in between those two trades, and I sold the call with the same strike price, okay, $45, until next Friday, until February the 5th, and I received $3.20 now for that particular trade. So $3.20 multiplied by 2000 shares, it will give you $6,400 profit a week, right? So, and interesting enough, this money already in cash, so that's the money which I received and I can spend it, so I can do it. So it means that within 2 weeks I generated in total $4.35, or roughly $8,700 in cash from this activity. Now, if by next Friday the price of BBBY will grow up above $45, so the shares will be taken from me, and it means that I'm going to also profit the difference, because the share price is now $35. Now I'll tell you exactly. At the moment, like you see, last price is $35, and it means that if I sell for $45, I also make $10 profit on the move, and it will generate $20,000 additionally if the share price is going to be high. So for me at this particular moment, it doesn't really matter what happens with the company. So of course I would prefer if the share price moves above $45 strike price, because at that particular moment my total profit will be not only the 8,700 which I generated here, but also $20,000 on the top of that. So in total it will be close to $30,000 for the 2 weeks. Now guys, what happens if the share price doesn't go up? So I keep that cash and I will continue to do exactly the same. I've done with this company selling covered calls for quite already a few months, and I didn't generate that much money before. Usually it would be close to maybe 4-5% monthly. This time is just fantastic. Now the reason why I'm showing it to you, and not just to show how lucky I am, in a sense I am, but I just wanted to show that everyone could do it. everyone. Every one of you could do exactly the same trade. And some people, when I show trades like that, they say, "Oh, Igor, you're just lucky. You just got lucky." And I always tell you that, look, guys, the luck is when your knowledge meets the opportunities. Now, this situation exists on the market right now, and a lot of you can on Monday go and execute the same type of trade if you have these shares. Now, but who can do it and who can do it? If you don't know how to perform this trade, if you didn't know how to find this company and buy it when it was $10, you wouldn't be profiting from this particular activity. Now, of course, you can be trying to replicate somebody, but the best way in order to see these opportunities in the future, you need to learn. Now, first, you need to learn how to find this underlying stock shares which have this potential for growth, or like in this particular case, for short squeeze, right? Because there are certain parameters where you can see that this company or another company is kind of in the sense that can get short squeeze. Like, you cannot tell it for 100% sure on the market, but still, when you see that there are a lot of short sellers, and with BBBY, if you go to Finviz, so when you see this number 65%, then you see short ratio. So it means that in order to close those short positions, shorters have to buy whole average volume, which was for the last 30 days, and it will take them 5.3 days. Okay, a few days ago I looked at this, and it was about 7 days, because volatility increased during last couple of days. It's now 5.3 days, but still it's quite a lot, because remember that somebody has to buy shares, not only sell shares, not only buy shares, right? So, and if there are not enough sellers, so of course all these buyers will drive the price up crazy. That's what happened with the BBBY. So I wouldn't be surprised if the share price within next week will grow up, although I don't know, like nobody knows, and I hope that it will go, and I will make much more money than predicted. But guys, that's one of the parameters which you have to consider when you're trying to find companies kind of in a danger of short squeeze. And if you see something like that, of course, you can make a lot of money.
So guys, you saw the trade, you saw how you can distinguish the opportunities like that. Of course, it's not as simple as I just showed in this video, but you can learn it. It's all learnable. It's not something science, a huge science. You just have to keep an eye on the market. You have to see these opportunities, and when you see one, you have to take one. But the second thing which you need to know is how to execute this trade, because if you don't know anything about options, you don't know how to sell covered calls, of course you won't be able to do that. All right. Also, very important in this particular situation, you have to calculate your risks and understand those risks, because the volatility like that usually happens with companies where certain kind of unknown situation what is happening with the business, but the profitability there is also fantastic. Now, if you don't know how to do that, you can join our educational programs. We run one of the program which is starting just in a couple of weeks, and probably the links to like introductory video will be just under this video. So, but definitely guys, you can learn fundamentals of the company, how to pick the companies like that which have potential to grow. But also we have another program where you can learn. I showed you only one strategy of option trading, but there are more than 20 of them. So if you want to learn of them, join our academy and learn it as well. Okay, and thank you very much. Enjoy your trading, make good profit, and see you later. Bye.